Yo, what up guys? Welcome to a weekly review video where I will be breaking down how I actually made $16,000 in the month of May. We'll be breaking down a couple of trades and I'm going to teach you how to enter a lower time frame market maker model. I'm going to focus on the 15 minutes while you don't have confirmation on the 1 hour time frame. So it looks like you might not be able to sell, but with this trick, you can go into the lower time frame on the 15 minutes and actually find an entry before you get that proper closure. So that's something I haven't really showed you guys on the YouTube time frame alignment model series, but we're going to be breaking that down here. Before anybody asks, right, let me just show you here. This is my MetaTrader app. So you can see this is my account, right? So it's 16,000. It's real. Go to my Twitter as well if you guys want to see. Anyway, we're going to be breaking down price action. Let's go into DXY first of all. This week was pretty tricky. However, there were opportunities. And specifically, I used a relative strength between different assets to determine which asset I wanted to trade. And eventually, I went with USD-CAD at the end of the week because the start of the week, as you guys can see over here, right, this is very difficult to trade. There's nothing really you want to do in here, right, because it was an extended consolidation, as you guys know from the week previously as well. I didn't do a weekly review, but we'll cover this. I mean, there's nothing much to review. There's literally nothing to trade here, right? It's very difficult. However, you can see that with the new week, we had an opening gap. And then the important part here is that prices are slowly accumulating at the start of the week, right? And then we have high impact news on Thursday, right? So what does that mean? It means that you want to focus on Thursday and Friday, right? Because there was no volatility early in the week, as we can see over here. And then with the high impact news release, we have this massive candle, and then we had a retracement here, and then another candle moving lower, right? So you really want to pay attention to the economic calendar. So if we go, just let's go to the daily first of all, right? Because we don't know. Let's quickly go back to the 1 hour. We don't know this entire move will go bearish unless we look at the daily time frame, right? Let's look at the daily time frame over here. Let me remove this line. It's insignificant. We are opening over here, right? So what do we do at the start of the week? We go back into the volume imbalance, and then we start to have very small bodies before high impact news, right? So in here, you can literally not trade. You should not trade in that little area. So because price looks like this, what are you going to do with this price action? Be honest with yourself. If you could find an entry on the lower time frame, it's pure luck what you're doing here, right? Because you want to have a nice candle closure to give you a direction, which is not the case over here. So let me remove this. And if we look at Thursday, high impact news release, we ran the high here, right? Go to euro. We did not run this low down here, right? This is important because this is SMT. Now, I say this often, SMT is not SMT just because it takes out the high and the other asset takes out the low, right? It is SMT after it got confirmed with a CSD, right? And that's the important part when you're using SMT. So you should not really be trading Thursday's candle. We go to, let me see. Yeah, we'll go to Euro USD. It looks a little bit cleaner, right? So we had a lot of chop at the start of the week over here. Then we had SMT, right? DXY took out that high while EU did not. You should not really trade this candle because you don't have the proper daily candle closure. If you want to do it step by step and do it in a sequence, you should wait for Thursday to close, and you get the most gorgeous time frame alignment model setup. However, personally, I did not take it because I did not really trust it because it was chopping hard early in the week, right? But this is where you use market maker models, and this is a little trick I use to not get confused to what is going on over here. If you want to use a market maker model, zoom in so you only see sell side of the curve and buy side of the curve, right? That's what you want to do. Don't get confused with whatever is going on to the left of it, right? And now we can actually see consolidation here, right? And we have the low risk buy formed because we have a smart money reversal here, which is important. It has to have SMT. SMT needs to be on the low if you want to see a higher time frame or at least an intra-session reversal. There needs to be SMT on that low, right? You don't necessarily need SMT intraday, in my opinion, only on the reversal of order flow, but you could technically use it during this session as well, because you will look for a reversal intra session, so to say, right? So we have this range over here, right, which we formed on Thursday. We should not go below this low. Why should we not go below this low? We have these down close candles here, right? So this makes it a strong area, and this already took a swing low here as well, right? So you don't want to trade below this low. So no, we're not going to take a fib and put it down here. We put it here, right? Now we look for a smaller range within the bigger range, classic time frame alignment model. You have this low over here, right? Let me remove the premium and discount, because you already know this dipped into discount, right? And we have this one is attached to the low, right? This is the low and then the high. So we have an order pairing, smaller range. Literally the model is you buy below the low, stop on the range low, you aim for 2R, which is even before the daily fair value gap gets hit, and that's your trade setup, right? I did not take this one. As I said, again, I didn't really like the daily candles, but now we can use a little trick, right? That is using relative strength and using another asset to compare what is best to trade in that moment in time. And this is where I used USD CAT, and I will teach you the lower time frame entry model before you get confirmation on the 1 hour. This is a really interesting thing I do a lot. So let me just do this, right? Let me do this. And then we have this massive drop on Thursday, right? This, I called this one during the live stream. I don't have I have to grab the clip, but yeah, I called this short in the live stream, but it's very likely to drop. Obviously I didn't give an entry and TP and everything, because I was sitting still for Thursday, right? But I was very convinced this would drop because we had so much sell side liquidity engineered at the start of the week, and we had high impact news, right? We also had Canadian dollar news, if I'm not mistaken. No, that was on Friday actually, which is actually good for the trade I took on Friday. But we had the USD news, which caused this entire drop, right? Now, we took out all the liquidity, so what you need on the minimum is a retracement to premium before you look for sells, right? We're not gonna short when we're down here. This is all inducement. If you want to look for shorts, you do it. You do it when it touches premium, or it touches premium, and then you look for a confirmation, right? So I'm gonna break down that confirmation where I took the trade. A very interesting way to look at the lower time frame, by the way. So I don't trade 50-minute time frame too much, but this is actually a very solid way to determine if you can get in, right? So let's look at this, right? This is important. This is how price action looked like after news release, right? So we were here on this candle, 7 a.m., this one. Then high impact news at 8:30, right? Manipulation. So afterwards, it's very likely that price will distribute lower if you're bearish, obviously, but you need some sort of confirmation, right? Ideally, you look for a CSDOB, right? Which would be closure below this one. And then you can short it, and then you can trade lower. Now here, let's look at the next 1 hour candle. How are you going to catch this, right? How would you be able to catch this? You can't, because you waited on the 1 hour to close below, and then you wait for a retest on the OB, right? And then you missed the trade because it did this instead of just closing down here and then retesting it. Now you can use this thing I use on the lower time frame. Not too often. I use it rarely because I just trade the 1 hour most of the time, but I knew this would drop again because look at the daily candle, right? This is also important. Look at the daily candle. Let me remove this real quick. This looks very nice, right? Because we don't have any imbalances here, so there's not really an area where price should go higher from. And then we also close below this candle here, these two candles, and we had this over here, right? So I need to go back one bar. So it looked like this, right? So what would you expect for the next daily candle, right? You would expect a retracement back into the OB or the up close candles, and you would expect price to go for previous daily low again, right? That's the most sensible thing, right? Even if the higher time frame wants to go bullish, that's very, very likely to happen. It wants to go for previous daily low before it goes higher again. Very easy draw. Now, if I go to the 1 hour, right, and let's remove the replay button here. How am I going to catch this? This is where you use a 15-minute market maker model, right, during the session. So you do have to be in a kill zone, ideally, You don't necessarily have to be there. I don't think you need a kill zone for everything, because if you use a 1 hour base stop loss, but you enter on the 15-minute, if you use a 1 hour base stop loss, you're still using a 1 hour structure, and that does not require a kill zone, in my opinion. But let's go to the 15, right? So what you do here is you utilize buy side of the curve to frame a new PD array on sell side of the curve, right? And even if you get that new PD array, you still need to wait for a closure below the PD array, right? And I will outline what that looks like. But first of all, a market maker model always starts off with an original consolidation, which we had after that big drop on Thursday, right? So we had this consolidation, late New York and Asia session. And then we did not take out previous daily low. This is important, right? You want to have previous daily low intact to do this kind of trade. Then price moves up, right? London, and then high impact news release pokes back into premium of the range. And now we're going to zoom in, because the moment the 9 a.m. candle closes, which is over here, right? Let me just put an arrow here. This is the 9 a.m. candle closure, which is not below that 1 hour OB I just showed you earlier, right? But we get a proper 15-minute closure below this little up close candle, right? Which indicates price is very likely to move lower. This works without a 1 hour confirmation, because we touch premium. Daily candle gives us an indication we want to go for previous daily low. We're using a 15-minute market maker model. The only thing we need is a failure of a bearish or of a bullish array here, right? So this is the bullish array. Let me do this. Right, this is the bullish array, so you use the buy side of the curve. This is where price should go higher from, right? And you wait for a PD array to form, which is an up close candle. But this doesn't mean we're gonna go bearish. We need the closure, right? So this is this candle here. The 8 or 10-15 candle closes below the up close candle, because the 10 a.m. 15-minute candle does not close below this up close candle either, right? So you need to wait for this one. Now, once that one closes, you can either choose to do a short, just as soon as the candle closes, put your stop above the IFEG and you aim for a 2R, which is easily to do here, or you wait for a retracement and have an even tighter RR, but I would still use a little bit of a wider stop, just in case this high gets run again. There's also always a chance that SMT occurs, right? So even if you do it like this, like 2R it's already there, right? When it takes out this little low here and it dips even further, right? So I aim for 2Rs, very consistent for me. You don't need to greed for 10R or 8R, whatever, right? Consistent 2R, sometimes 3R will build a better equity curve in the long run, and you won't have to have a low win rate. You can have a higher win rate with 2R. And I have a video on that, by the way, how you want to calculate your win rate versus risk to reward. I will see if I can put it on the screen or in the description. But yeah, these are this is the breakdown of the trade I took Friday, which finishes off my May for the 16,000, right? Wednesday is my payout day, so I'll show you the certificate on Twitter, of course. Surely it will get approved. I didn't break any rules, of course. I hope you like this review, guys. Make sure to like and subscribe the video. Make sure to follow me on Twitter as well. I post there. If you are not sure where price is going and you want to have a little bit of a helping hand, right, you can always join my Discord group. It's a link in the description. But for now, I will check you guys next week. And I will also start the one-on-one mentorship video series. If you haven't heard it, I posted on Twitter. I have a one-on-one student that will take you to the entire process of what he needs and how I'm going to build up to be a profitable trader. So make sure to check that out. But for now, have a great Sunday, and I will see you next week.